With the market coming onto new highs, we want to know where the momentum leaders are. And that's what we're covering today. The 30 best momentum leaders on the ASX, being those best performing companies. And then we want to know, well, where are the next leaders, or which ones will be strongest? And that's where we look to the launchpad, because the launchpad is where they show up before they become momentum leaders. There's a list of 30 for each set of lists, and Gary Glover's been through them to find the best trading opportunities, his favorite charts, and some lessons to draw from them. And for the members who get the list at the same time as Gary on a Thursday afternoon, they've also added some requests and a good question as well for today's conversation. With that, we say good morning, Gary. How are you?
Yeah, I'm pretty good.
So I know you've got some research that you want to share with us, and we'll put a link to that video a little bit later because I'm excited to record that after this video about moving averages. So we'll share that link once we've got it. We have the market at new highs. We've seen your 2025 blueprint where you've covered sort of the projections that you look for. But then when you come down in the day-to-day and week-to-week, you're looking at the quarterly momentum list that you've received. Is anything standing out to you in this week's quarterly momentum?
Number 2 and number 3, and maybe number 22, all EPs, all episodic pivots there. So yeah, so we are in earnings season. So oftentimes we can get stocks that report pretty well, and we gap up and potentially can run there. So we can get that episodic pivot sort of style there. What I prefer to in my sort of trading rules, I prefer it as a game changer sort of trade, but I do follow the episodic pivot type of rules there. So I noticed there that Computershare was number 2 on the list. So obviously this has been sort of top right, definitely for the last 3 or 4 months. So been a pretty strong stock here. See there sort of sat above the 10 initially, then probably hugged the 20, and then well and truly stayed above the 50 most of the time there. But we did get an EP there, Chris, which is kind of interesting there, because I thought, it's always interesting to have a look and sort of see, this is a stock that's been running quite a bit here. So you're always probably afraid to, these things report well and then they open up. And then, most people are probably kind of scared to trade them because they've gapped up too much. But episodic pivot rules sort of say, okay, if they're typically around that 7% is kind of where like most of them are looking to open up. And then if we know if it opens up more than 14%, if it's up between 11 and 14%, you're in the high risk zone. Anything over 14 is like a no-no. So you really, I think around that 7% is sort of, I think 5 to 8 or something is the sort of sweet spot, something like that. So so interesting actually that Computershare actually opened up 7.5% above the entry, and the basis of those episodic pivots there, the suggestion is that you give yourself a 1% sort of stop there. Might be a little tight there. It's sort of hard to get that on. You've got to be quite dynamic with that stop as well. So, but if you, this one here would have worked actually if you followed the rules. So, by obviously open at 7.5%, which is in the sort of in that 5 to 8 sort of spot there, and if you allowed a 1% stop on the open, I think it avoided that by about 4 cents. So yeah, so
you'd still be in there, you'd still be long, and you'd be happy with the trade.
That's right. Yeah, and normally there's sort of like 3 to 4 days is sort of that's the sort of I think that's the 80 percentile in terms of sort of getting sort of gains and stuff, and so, but CPU would have actually worked there. The other one there was Temple and Webster was actually number 3 on the list. Now that's open a bit further here. I tried to work out the numbers there. I think it was closer to around about might have been at least 8% high there. So yeah, try to work. I think it was actually more than that, Chris. Actually, I think it was 14.28, and then opening up around 16.10 there. So looking at $1.60, $1.70 or something there. Is that right? So on 140 there would have had it up around about the 12% mark there, maybe 12, 13% there, which puts it in the high risk category. So even though it has gone higher, if you had a 1% stop on that open there, you would have got hit. So that's what I mean. It's like this one's open up too aggressive. And then so these guidelines, it's interesting. These are sort of guidelines that I think someone had sort of studied these over a multiple years, a bit like the Bulkowski sort of style. They're pretty decent guidelines. And the other one was Nick Scali, which obviously had nice gap as well. And again, this one was around about 8. It might have been sort of 8-9%. So this again was probably a pretty aggressive sort of open there. And yeah, so it has sort of this one again did actually sort of fail and come back here. So yeah, the two that opened up a bit more aggressive than the other one kind of failed. The one that was probably in that sort of sweet spot, so it's around kind of like, I keep sort of reading around 7% is kind of the good number there from that data there. So yeah, so it's just interesting just sort of seeing that, quantifying that. I mean, it's a big gap up there on that, and it's had a massive wide range bar as well, a bit of a spinning top there sort of thing as well, and that sort of bar there. So just just interesting sort of looking at those EPs and the data there. One would have had you definitely staying avoid, one would have had you definitely in, and the other one was probably sitting in
Borderline.
Yeah, borderline. And so if you took the one that you should have took, it would have worked out. If you avoided the one that you should have avoided, it would have worked out as well. The one that was borderline ended up probably stopping you out. So but interesting as well. Number
Gold miners.
Yeah, gold miners pretty pretty interesting here. Obviously, it's still pretty strong trend here, sort of moving pretty high here. The thing that concerns me the most there, Chris, I don't try not to get away from momentum based here, sort of learning there. But if you look, I mean, this has been running for a long time here now. And you can see on the weekly, we're up near the old highs. See, this is sort of like, if I was to roll out, say, 10 years there, just sort of shows this is, so it's kind of a very prominent level here on the chart there. So we're sort of hitting, weekly resistance there. What's that? 2020. So, 5 years apart here. The thing that strikes me the most with this evolution is the volume for the last 8 weeks here. So look at that, all that volume coming out of here. 1, 2, 3, 4 weeks of volume here. We have one down week, and the volume's the biggest volume of them bigger than the previous 4 weeks. And then we go up again, 1, 2 here, pretty light again. Only this week we're seeing a bit of volume here, which is pretty much coming in right at the top here. So look, if you go back and look at, what this looks like, a sort of a fourth wave here sort of style, this contraction, and this looks like a classic fifth wave. And if you learn Elliott wave, is that they do talk about the fifth wave being on very low volume. So just seeing really light volumes there on that move. So that worries me a little bit with that move there. So the weekly is sort of showing very light volumes on this rally here. And, if you go back and study BHP and Rio, that last leg up into 07, up into $100 and maybe $50 at the time there, you'll see a noticeable decline in the volume on that last leg up. It's you study that move there. So it's like so you can have that last wave up here, last expansion move, and it can go up, it can go up pretty strongly here. But that last leg there is, that's those lighter volume is typically a fifth waves. So it's just interesting here that some of these stocks are approaching some big levels here. They're also 13 weeks from the last pivot point, Chris, as well. So that 90-day exhaustion as well. So I'm just seeing a few signs there to be careful there. So the sector's got momentum there. It obviously looks like it wants to go higher there. And I know that spot gold, everyone's sort of saying that historically there you sort of see spot gold go to 1,000 or 1,500 or 2,000 before it, the big numbers there. So we're still a little bit shy of 3,000. So I think everyone's thinking we'll get to 3,000 here. But those big numbers have been resistance points in the past there. So big levels for the market here. So just be careful of gold here. they're all running here. I think there's a couple on the list there. I think we had RRL.
Yeah, there are a few on the list, and a few came
Yeah,
up on the list of sort
yeah.
of filtered.
So far, that's just sitting on top of the previous high there. The volume is up. That's, you prefer to see this run up here and then the volume decline. So we are seeing volumes up here at the high. So that can be a sign of distribution if you're seeing heavy volume constantly here. So, but so far this is like a little ABC sitting on top of the high here. So that's kind of constructive to me. Evolution is the one that doesn't look so good on the weekly.
Mm.
The volume there, just that volume profile is just not so good as well. Northern Star is, it's looking okay here. Again, there's the one thing I'm seeing it, not that I don't look at this all the time here, but if you look at the wave structure within those moves here, like it's something like the evolution there, you are seeing a clear 5-wave structure in those. So you're seeing that sort of mouses. So you're seeing that little 1, 2, 3, 4, something bit, and then sort of 5th wave structure there. So you are sort of seeing, and even within this little 1, 2, 3, 4, 5, this is the expansion range. I know electricians they look within the waves and they look within waves within waves. So
Fractals and fractals. And
yeah, so looking within the waves within waves, which I don't like doing personally because it sort of can keep you can take you places that are incorrect. But the waves within waves are actually a little bit concerning here at the moment, just because they are sort of completing some. They are suggesting sort of the structure is complete there. So yeah, just be careful with some of those. But look, they're all been pretty good here. I mean, GMD is on the list as well. Yeah, I mean,
you talk us through GMD. Go for it.
well, you'd like to sort of see them run up here and see some lighter volume. So saw one day a lot of volume here, but you're still seeing a bit of volume in here. But look, the trend's still pretty robust there. It hasn't broken a swing low. It has sort of this has sort of tracked the 10 here because the thing about trends is they sort of build, and then as they get momentum, the whole thing just sort of winds up and should be a bit more aggressive. So we've seen here that GMD has actually held that 10 all the way through until just the other day it actually broke below the 10. So we did see a bit of a loss of momentum there. But look, yeah, it's one here that it can, after it goes for the 10, it can go through a sideways move. But just see how this has been. It has gone through a few times before. So yeah, just seeing a few signs there just to be wary of it. Look, we do know that the trend is our friend, Chris, and that oftentimes these things will go a lot further than we think here. But we just got a few things there to watch on gold here. We're seeing some of those last leg rallies up there be quite a bit lighter. We're seeing gold approach a really key big number, which typically has sort of stopped the gold price in the past. And we're seeing wave structure there, which is a bit, I know McLaren will sort of say, you see these 5 waves, and then you look once you start to sort of see these 7, 9, 11, 13 drives, you're getting up there. You're getting really extended.
Alarm bells.
Yeah. And the thing I look for in the end too is I'm always watching for like a market to have a pullback, and then if it actually goes up 3 months from that pullback into a bit of a vertical top, like a 90-day sort of 3 month exhaustion, that's always a bit of a sign there. So I'm just seeing a few of those in that same sector here. So
well, just on trading the Aussie gold miners, particularly the gold producers, I'm not sure if you've noticed this, and maybe some of the viewers have, and they can comment whether they have. But when I run filters, I'll run them across everything on the ASX. And when I end up getting gold producers, I have to filter them and view them differently. And I don't know if you get this, Gary, because when I look for my setups and I place my stops and my targets, I find that the gold producers end up gapping through more than almost all other companies. And I get the feeling that this is a byproduct of a fair few of the companies you just listed. They're on international gold mining ETFs.
yeah.
So then they have sort of the overnight trade that comes in the morning. And just looking at these charts, most people will notice that there are more gaps between the open and close than a lot of the other charts that we'll end up viewing. So have you found that with trading gold producers on the ASX, that because of that international exposure, say through ETFs or whatever it might be, that they trade just a little bit differently, and then you need to look at things like Elliott Wave and other things to help you get the reading because the charts are different than other?
Yeah, it's funny. I was just discussing this this morning with someone else actually. Is that gold is kind of it is a tricky sector to trade there, and I've actually sort of found it sort of 50-50. That the good thing for me is that if I'm sort of been wrong on it, I've sort of knocked myself out straight away. And when I've been right, it has moved for me quite nicely. So it's yeah. So I don't find it the easiest sector to read there. And then because oftentimes we've seen here like the gold price started to move, and then a lot of the gold stocks were lagging, and even some of the gold stocks were actually breaking down.
I think RRL was a lag, and we looked at that in the launch.
Yeah, there's a few.
It's behind.
Yeah, and even like they've really played catch up here, really, because that sort of with the Aussie dollar moving lower, gold price going up, that's been really beneficial for
Two tailwinds.
for the Aussie sort of producers there. But even those sort of really, it's like that trend sort of building structure, you wind up, and then I know if you look at that sort of again, it's whether it's Elliott wave or wave structure, however you want to label it. Oftentimes, the last drive, the last leg up. So just say you've been building for say 2 years. The last drive up, which can be say 3 months of those 2 years, or say 3 months of 18 or 21 months. The last drive can be 50% of the entire range. See that over and over again. So you're sort of building, and then
Bang.
you get that bang move there. So that's why I mean. That's why you got to sort of stay with these winners, because they can just sort of keep going here. That's the thing, with the winners there, and then the big wins can sort of come at the end. So that's why you sort of need a good mechanism to sort of trail and so on. That's why we sort of talk about trading some in the heat and then holding some for bigger gains as well, and then just whether using a moving average there. I'm gonna cover this today. Not in this video, but I'm going to cover it separately. But we're going to talk about that, how that actually might using different stops and dynamic stops, and maybe programming in some trading into heat, how that affects profitability and maybe the distribution of your returns as well. So we'll go into a bit of detail on that. It's actually quite interesting. When I sort of went through it, I'm curious to sort of, because a lot of people are asking,
which moving average to use?
Yeah, what stop should I use? I'm not really a short-term trader. Maybe I'm longer term. Or what's so what this sort of shows is sort of we have a few basic sort of ways to run stops. There's probably 2 or 3 different ways to run them, regardless of how we run them. It's what sort of follows that, the mechanism for sort of how you trail them, whether you trade into heat there. What that can actually sort of change the results. It may not change the net result, but it can change the sort of the distribution of results there. But I digress there. We'll cover that separately.
We'll put a link up the top once that's recorded,
so
that if you're watching this after a couple of days, that link should be above. Yeah. But you've got more momentum, do you? Or
yeah, but you're seeing, I mean, look, that list has got gold all over it, Chris.
Yeah.
In the quarterly momentum. So it's been really, really strong here. So it still is sort of strong, but just be a little bit careful there. With those names there, just seeing a few things just to be mindful of there. That's just cautious nature there. But IMD, number 12 on the list there. So this is interesting here because we've sort of got we covered a lot of cup and handles there last week, Chris, and we got another cup and handle in here. So you can see how we've rounded up to this sort of point here. And there's a few little pullbacks there, nice little distribution there, and then we did eventually sort of come through this. It did a few days there, but then it did actually sort of break through here. So it's funny how it's sort of once it sort of pierced this right hand side here, has sort of kept going on here, and then this day that it broke out really hit the range there. So we talk about this cup and handle there. It's sort of something I've been trying to work on. It is you do get little shakeouts and stuff in there. The thing I've sort of noticed with the cup and handles is that once they sort of start to set up on the right-hand side here, you do have to allow a little bit of room for that pullback. We talked about this last week, cup and handles there. ideally looking for like a little three-way pullback, and we covered that B wave last week as well, Chris, as well. But you normally get that high, low, high, low, high, low. So you can get it. It won't sort of break the swing, the last swing low. So might sort of, so giving yourself a bit of room here. So maybe starting with smaller position size and building into this sort of cup is the way to go there, because a good sort of cup there will just, even though it might tighten up in here, eventually break out. They always build a series of high lows, high low, high low. So that's probably the more important stop level. And sometimes they can be too wide, but I find that sometimes even a messy cup, it rarely breaks below the last swing low. It might have a pullback, a throwback, but it'll still hold the previous low, and then it'll go again. It might even have a second pullback, a little throwback, but it'll hold the previous low as well. So that's just
But just to clarify that, you're saying that sometimes that stop, which seems it's well supported in the cup and handle where it doesn't get breached many of the times, it can just be too far for you to actually take the trade. So you might find a cup and handle that you like, it's forming nicely, you're watching it for a couple of weeks, and then it gives you an opportunity like this. But if your stop is too far away and you're not getting the risk reward ratio that you want, you just let that go. Is that how you approach them?
Yeah. Look, last week we covered a couple of handles quite in detail, because we had like 5 or 6 in a row. And if you go through that model book, the model book is just littered with cup and handles. The strongest stocks have those cup and handles set up there. So if you haven't sort of studied the model book, I'd go and do that, because that sort of shows cup and handle moving out. I'd say in 2/3 up above here, 2/3 of the time, those cup and handles are in the strongest names just over and over again. So, but you do need to allow a little bit of room for them. It's just, it's tricky. But you're almost, I found actually trading that one here recently. I bought the break, and then it stalled and started to pull back. So once I sort of realized I had a bit of a B wave, I thought, I'll trade some out of it and come back, and I'll trade some back in. I was waiting for the new low, but the new low didn't come in. And it was hanging every day. I thought, this is not going to get a new low, so I better get myself back in again. And sure enough, it popped back up again. So you've got to be a bit flexible in these things there. But I think the key there is just probably start a little bit small on it. Give yourself a bit of room, that stop, and then if you do get that little you get the little 3/0 pullback. That's the sort of that's the low risk setup there. But as we know in trading, it doesn't always go to plan. What have we got there? AFG was number 13 there. Bit of a VCP in there, Chris, as well. Did see this one here. I sort of had my sort of bias blinkers on there. I thought, finance group, a lot of these finance stuff. But reality was, we've seen here the financials are super strong.
Yeah.
So
cool hub.
The banks have gone from 20 times to 25 times to 30 times earnings. There's just been no stopping these things there. Even though no analyst has got a valuation anywhere near where the market is, they just can't stop going up here. So I can't get my head around it. I've 20 years of broking, never seen them trade on valuations anywhere near this, but we know we're in a momentum market here, and sometimes you've got to put your common sense aside here and just run with the bulls, as they say. But this has a great VCP setup here, really. So it stayed in the top half of the chart here, stayed nice and tight. Whole thing tightened up and it broke out here. The breakout day was beautiful there, and it hasn't looked back since. So again, it's that VCP. It's up there with the cup and handle. Those are the two setups that we see in the strongest names over and over again. What do we got there? ASB. Yeah, this is one that was sort of pretty strong there. Had a nice little, little bull flag in here, Chris. Then had another move there. Came back here, probably a little deeper than you'd like to see. But then it did sort of set up there, and you look at this here.
Look at those moving averages.
Yeah, look, I like to. One of the things is that this was sort of strong, then showed a bit of a deeper pullback there, which would have had you a little bit not so happy with it. But it did have a move here, and then it did sort of congest there. The thing that this would have just crept into me, because just that congestion there was pretty light through here. You can see how the volume was pretty light. And then we did pierce at 50. So I like to sort of buy them above the 50-day moving average. So this would have, this little B-wave break here would have just fitted into my
criteria for trade.
yeah. So it stopped showing relative strength. The sector's pretty robust, as we know, and then breaking through that, and again, it's just got on with it. Again, it's sort of been. This is a real sort of traders market here. So I've seen some some big VCPs and just the bigger names there. I think I highlighted a few there last week, Chris. I've seen another. I think BHP did a VCP here. Whole thing, tightened up, pull back here nice and tight, and then pop through the range. I think is it Light and Wonder? Again, sort of like there's a VCP, but loosened here, but tightened up here. Get a little B wave break in through here. It's had a bit of a pop as well, so it's a bit of an erratic stock here. So, but definitely seeing this setup here. Just even through, been surprised how they've been actually popping through the big ones as well. As we got there, I'm a little bit going side to side here at the moment, but I did like Domain here. This is sort of one that did make a big false break on the weekly, so I love that expanding. Like it expanded to I was watching this here. I sort of in the old days I would have traded this false break here. Yeah, so went to a new loan false break. So in the old days I would have traded this false break here, but now sort of my rules sort of tell me I'm trying to stay in the top half here, which this wasn't. So I waited. I thought, no, I'll just wait for this to sort of either build like a series of high and lows, like a 0, 1, 2, 3 pattern, build a bit of a base, or I'll wait for this to sort of set up a VCP. So it did set up a bit of a VCP in here. The whole thing sort of ran up, sort of say this little bit impulsive, pull back here, and the whole thing sort of tightened up, and it did crack through on this day here, which is the day that I did buy it on that real break. Did pull back here, which was a bit of a worry, but it did held the sort of 20 here quite nicely, and then it has popped through here. So it looks pretty good here. So should keep going here. So, but still seeing. I guess you just got to trade your rules in your book there. That's the key thing I find there. So if you see things you do like, just keep an eye on them because maybe they'll sort of set up within your playbook there.
Exactly. That's part of what the launchpad is to find something that you like and then just keep watching it like you did with Domain. But
we've seen a few stocks sort of pop here as well. We've talked about a few. Sometimes I've seen sort of stocks that have just come out of these deep lows, and I don't really like buying deep lows because a lot of the times they're traps here. But we're seeing in this market some of these deep lows that the market is rebounding pretty hard out of them, so they can sort of come out of them quite nicely. But I'd rather wait for them to have a run, pull back in a little three-wave congestion, and then come in for a lower risk entry, see that volume profile line up or a VCP or something like this. But I noticed Domino's has had a bit of a jump here, so that's pretty impulsive there. It's now pulled back here, so would have loved to have seen this do some sort of little three-wave congestion, lighter volume pullback, but it's been pretty messy here so far. So I'll just avoid that one for the time being. What else we got in there? We got HUB. I noticed. I was going to say this before yesterday. You can see here, just even though this was an EP here, Chris, episodic pivot. And net wealth obviously went with it. And in the last 3 or 4 days, you can see here with it. This is a little high tight flag up here, little bull flag. And I was looking at this yesterday. I think, wow, this is actually pretty tight here. This looks like it wants to go to a new high. The only thing I will say, when they start getting extended and getting vertical like this, oftentimes they will have that little bull flag and then pop, and then that might be the
last hurrah.
Yeah, so that's the thing you got to be careful with there. That can be the sort of new high and then finish there. So, but don't want to get ahead of ourselves either on that. Don't keep thinking you've got to But that's pretty. This is still pretty robust there. So this could still keep going higher here. So, but that's definitely a point. Once you've got that little 5-wave structure and that little congestion break there, that's when you sort of got to be tight with your stops there. To me, I'd be tightening that up. It can keep going as we know, but just got to manage the downside risk there. I think CQE, so property trust there, which sort of popped out there, a little bit of a VCP, but probably on the lower side there. But I think I mentioned a couple of weeks ago, I thought some of the property trusts were actually, they did hop onto the launch pad about 2 weeks ago, Chris. So I had quite a few of them come through. So quite a few of them actually have gone on with it. I think Dexus has gone on with it. I think Charter Hall has gone on with it. So we can see here, it's funny here, property trusts have probably only hit the launch pad maybe twice in the last 2 years, and they've both run pretty well. So it goes to show, you can see them in there. They should be alert. But again, we just want to stick with the stronger names in there rather than the laggards there, because we've seen in the past there, we saw the last run there where there's probably trusted that the strongest, maybe 4 or 5 names that popped in the list early did really well. I think a lot of laggards there that probably came in later on didn't do so well. So again, the greats tell us that we stick with the leaders and we stay with the strongest names there.
Yes.
That's pretty much it. I mean, that's a fairly lengthy list there, but yeah.
Well, it is a good list, and like you've mentioned, with the property trust showing up a couple of weeks ago and last time, well, on screen here, you've got July, August, sort of early August, I think they showed up, and you and I both joked, well, they don't move much. So looking at this week from the momentum leaders, there's still the gold explorers, which is pretty obvious. You've covered that. The gold producers, we talked about that as well. West Australian miners, we've got a strong overlap there. We've got some individual commodities, but nothing with really huge standouts other than sort of the housing cycle exposure, insurers, and the companies producing minimal output. But banks, housing exposure, and insurers, that was kind of something standing out, but you've discussed those.
Yeah.
Before we look at the launchpad leaders, there were just a couple of other requests that members had sent through that I'm not sure we'd covered. CYL was one of them. So solid trend there.
Yeah, I mean, you're late stage here, but at this stage there, the trends, strongly in place.
So yeah,
kind of a while ago.
it looks like Iris is having a bit of a break for you. So while that one's having a break, it normally just drops out for a second and then goes to a different port or something. So I'll cover the launchpad leaders while we're waiting for that one to come back online. The launchpad leaders that we're about to cover, we've got a couple more momentum requests to check, but we've got bond proxies. So this is what I noticed quite interesting earlier in the week. There were a fair few listed investment companies and market proxies that popped, and now we've got some non-listed property trust bond proxies. So think of those that are really good dividend payers.
Yeah.
Used to be the banks, used to be Telstra, used to be the utilities. There aren't many pure play utilities or infrastructure assets anymore. So that's an interesting insight to see what's happening there as interest rates look to be coming down. And industrial listed property trusts, again, listed property trusts. So there's like 5 or 6 different groups of listed property trusts back in the launchpad, like you said a couple of weeks ago. And the one that caught my eye throughout the week was silver and zinc. So they were interesting ones, and I delved into some of those different groups to really see, well, is there a trading opportunity, and shared some posts with some members. What we might do here is just pause the recording for a second while we wait for Iris to come back online.
Yeah.
All right, so we've got Iris back on and we're into the request stage for the momentum leaders. Gary's got CYL on screen, and you were saying that's sort of late stage in where it is. So being cautious at this part of it.
Yeah, no, it still looks pretty strong there. But yeah, we've sort of, there's nothing wrong with this at this stage here. So yeah, it's a hard one there because it's sort of like has hugged the 10 pretty strongly there. So it's obviously pretty strong here. So really only had that one or 2 day break there, but probably the 20 days probably in the past they've been a more a better indicator for it. So, but yeah, so this stage the trend looks pretty robust. The volume looks pretty good. It's only been one really selling day down here. So yeah, you'd probably be still sort of,
happily long.
Yeah, so you'd just be trailing this quite nicely here stage.
MVP is another one. Mike, Victor, Papa.
MVP.
Yeah. So explosive. I'd want to say a high tight flag, but it's almost too short and kind of got onto it too fast to make the most of it.
Yeah, look, it did have that. Yeah, it's a bit it's tough on there. You're sort of you're trading down, even though there was a bit of a VCP in there, it's still trading down the bottom end there, Chris, as well. So, but yeah, it did have a pretty explosive move out of that. So you had those three, few days up into that high, and then we did see 2 or 3 days down in here. This would have been the more interesting setup here. Is actually it's gone back up to retest the high again, and then we had 2 days there, and see that day there. Yeah. So that's probably you maybe you buy this little B wave there, but as Kalamagi says, loose for losers and tights for winners. It's a bit loose here, this sort of pattern there, but yeah, that's really the only trigger for me personally. There would have been too loose for me, but that if you were long that and you saw that really light volume there, you'd be encouraged by that. So yeah.
And OBM, Oscar Bravo Mike.
Yeah, look, again, pretty strong trend here. So I mean, really hugging the 10 at the moment there. So yeah, one thing you could look at here as well is see how, like, I like to give it a bit more room, like start with a 20 and stuff there. Some long-term investors might want to start with a 50 there, but as it starts to wind up, you should start to tighten up as well. Like if you're not going to sort of sell some of the heat, then there should be a mechanism to sort of trail it there. So whether you trail the stock by a percentage or whether you look at the last swing low, but you'll often see how this thing, last time this thing got going here, it accelerated. And then once it broke the 10, that's when it was in trouble. So, and this is humming here at the moment, but based on the personality of this stock here, once it starts getting vertical here, then where's your sort of stop going to be? That's probably the question there. But it looks okay here that you haven't seen any real deep selling here so far. So, but yeah, the trend looks pretty, good structure here so far. Just about sort of managing the trade there for the time being.
Another one that's been pretty popular, not just this week, but in past weeks, is Triple T.
Okay. Yeah, we talked about the cup and handle there last week. So there's our little ABC. I think we covered that in great depth last week. No volume in there, which is what you want to see with a pullback. Very, very light volume, and then popping through in volume here. So it looks pretty decent. So I'd be wanting to sort of see it hold on top of there, Chris. Sit on top of the
old highs.
Yeah, sit on top of the sort of the breakout there. So yeah, they can. So far we've pulled back here. You're not seeing any volume here so far. So still sort of constructive here. So it's okay.
And then the final one for the momentum requests is PGH.
Yeah, hard to cover that one really. Just popped out of the range. Yeah, you want to sort of see tight congestion there, but what is that stock, Chris?
PGH. I'm going to jump back into Iris.
It just looks like a stock that's sort of yeah, I mean, it's such a gappy sort of.
It's a patch group. Oh, so packaging. Yeah, okay. Competitive with like
Yeah, so it's
escapes me. Aurora.
Tough one to trade, I think. So yeah. But you probably want to see this consolidate here first, I think. So yeah.
Right. Well, they're the momentum leaders, and then just quickly, we looked at the launch pads, the different themes. We had seen the return of property trust showing up in the launch pad, the bond proxies, silver and zinc very much at the top. So when you look through this list of momentum leaders, launch pad leaders, is there a theme or any particular stocks jumping out at you?
There was actually. I mean, I looked for that list there. You've got, CIA, Champion Iron, Fletcher Building, Dicker Data, Computershare, Domain, Worley's, Ansell, Smart Group, Iris, Commonwealth Bank, Ramsey, Elders, Westpac, Seek. It's big. It's all big caps.
It's very rare for us to see that, isn't it?
I know. Yeah, it is. Particularly this late stage in the market as well. So normally you see the big caps sort of maybe lead the market out of a bearish low. Yeah, so it is very strange to see these bigger names. Even Sonic is on the last list as well. So half the list is just almost top 50. So it's big, So I thought that was pretty interesting to me. What is that a sign of? Is that?
Well, this is something that we've talked about many times, looking at bottoms, looking for follow-through days and trying to not necessarily pick bottoms, but understand the dynamics of what happens there. And the phrase that I often use is that there's more speed and less tact with the money being deployed at the lows. And like you've always said, we see the large caps take off first, then the mid caps, then the small
Yeah.
caps later. But for me as a momentum trader, I like the washouts, but it's normally sort of after day 7 or 8 that I can then identify, well, these companies that you're just talking about, they've already taken off for 7 or 8 days. And then as they start to peter off, we see the mid caps that are holding and getting stronger. And that's where I like to trade. So what you've just described is, I often see that at the bottom, and I wait for this at the bottom. So
Yeah.
the turn.
Yeah, it's interesting now. I like the four of them. I sort of did recognise there was like Fletcher Building. I do like. Been talking about this one for a little while here. Actually, I sort of did buy a few in the portfolios around 260. This is, I think, this is one that I think the New Zealand economy can recover there, and it's sort of like people forget that the New Zealand had those high rates for quite a period of time here, so they've already cut 125 basis points. They might even cut again here. But you're just starting to see some of the NZ data just start to be a little bit more positive with the rate cuts there. So that should be good for housing sector there. But I still like to see a bit of a base here, Chris. So I sort of the one that I thought, okay, we sort of want to see that low. Then you want to see a first high low, second high low, and a third, that 0, 1, 2, 3, because then you've sort of got a base here. So a lot of these stocks in the list there have got a 0, 1, 2. They don't have the 3 yet. But if they pull back and set up another, like a third high low, that's normally how good bases are built here. So we do have, like, I think with Fletcher, Ramsey, Elders, Endeavour, those have been sort of struggling, those stocks there. They are all sort of building a bit of a base here at the moment. So even EDV there, sort of starting to, it's got a low, first high low, maybe second high low. So just starting to build some bases there. Even Ramsey as well, bit of a washout. Look, this has been an underperformer here so far. So I think it's still got some risk here, Ramsey, but I want to sort of see a bit more of a base being built. So before I look at these sort of stocks here, so because they're all bottom right. So we don't want to be jumping there too long, because sometimes, so far, we're looking for value here. These stocks have kept going lower. This market has been very momentum driven there. So I think you need to see a really solid base built before we can sort of look at some of those names that have gone left to right here. So I would like to see 3 high lows sort of set up there before I sort of play there. Because as we've sort of seen in the past there, it can take a long time to build the base and then get going here. We know all the money's made in the last, sort of drive, often the time, the last sort of legs there. So, so it's interesting that these stocks actually, some bottom dwellers there sort of setting up there. I think Dicker Data was on the list as well. That was another interesting name they sort of talked about. So that's got a few, got a low in place, high low, second high low here. So again, I saw this pull back and sit on top of that high there. We saw low volume here on the pullback. So far, we're seeing so far. Sit on top of here, that'd be a nice little structural setup there. But again, it's kind of been a pretty nasty downtrend there. We're just starting to break above maybe 1 or 2 old lows there. So we're now breaking, so I know sort of oftentimes you want to see one swing high broken, maybe a second swing high broken. That's when you potentially get a change in character. Then you sort of need to sort of see a base built there. So, in the old days, I used to go looking for these lows. You'd be stuck in them for ages. Sometimes you might even pick the low, but you can go nowhere for 2 or 3 months. So your capital's getting tied up here, So, as Minervini sort of says, you really want your capital going, kind of moving forward quickly there. So that's why we sort of try and stay in the stronger names here. So Sonic Healthcare is sort of one that's that has sort of done a lot of building here, and I think basically we've found resist. I think this is around about the 50% of the weekly range there. So I think this might have been the 38 here or something as well. So we've had a few technical zones where we found resistance there, but yeah, just starting to sort of work its way higher here. So it's sort of constructive there. But yeah, so the interesting market here, really. I mean, the last 2 days here, Chris, we've had CPI data, which was pretty horrible. That is very negative. And then you had more talk of more tariffs getting introduced last night. The market's gone up both days. Like it went down obviously yesterday and then recovered. Then today it's gone up again. It's like, wow, this is a market which is just taking bad news in its stride at the moment. So that, one
I've
thing.
seen that movie before.
Yeah. So you sort of, you learn, you do sort of, those are signs of the market strength here. So, I mean, if you're getting bad news, the market's still going up. It's just telling you the tape wants to go higher here. So, yeah, I mean, yeah, it's extended here. I think you've got to be sort of a bit cautious here, but we are sort of taking this bad news in Australia, which is quite amazing to see. I would have thought 2 days ago that CPI, that's not what we want to see. That's not what the market wants to see here. That's a re-emergence of inflation there. That's pretty negative for equities normally, but really shook it off here, which, to be honest, it sort of did surprise me a bit. So, yeah. What else we got on the? Already talked about the domain, the VCP on that. CIA was sort of one that I think I covered my weekly there. Just again seeing that change of character there. Did have a bit of a false break of the low here. Seeing some pretty good volume here so far. So it'd be nice if we saw a little congestion there, maybe tighten up. We saw BHP. I think BHP and Rio both been pretty firm here. So the sectors, showing a bit of strength there. So starting to sort of pop out of its ranges there. I think Elders was the other one I think was on there, starting to pop up as well. So it's hard. I mean, look, you can argue you get a little bit of a B wave here, Chris, but this is a deep pullback. I'd rather see, a bit further strength there. I mean, we're seeing some of these little B wave breaks go on with it from the deep lows, but this was,
You want to see more safety in the base building.
Yeah, it's still below the 50. It's really deep in the range. It's not what I'd want to see. The only thing I did notice with this one is that when I did scroll out, okay, maybe this is a low here. It's actually stayed in the top half of the weekly range, and it actually has done an undercut of that low as well. So a bit of a false break on the undercut. So maybe this actually, and commodity is pretty buoyant at the moment, and all the softs are just as buoyant as the hard commodities. So,
yeah, cocoa and coffee are.
Yeah. So kind of maybe thought, this one's probably worth keeping a close eye on, Elders here. If we get a lower risk set up on the daily there, because we're already seeing that's impulsive there, a bit of volume already going through. So okay, let's keep an eye on this because the weekly setup is kind of interesting there. Just doesn't meet my daily requirements because this has been a large pullback there, quite weak. And yeah, it's a B wave break even, it's under the 50, so it doesn't meet one of my filters there for that. But weekly setup does tell me we should not dismiss that trade there. Just keep an eye on Elders there. Sort of just goes on the radar. I think we've talked about most of the other.
There are some requests which might cross over with what you've got. So there was FFM.
FFM, is it?
Yeah. So now it's over the 50-day moving average, but quite wide there.
Can't see that on my list. I couldn't see half the other ones on the list either. So yeah.
All right.
But it's yeah, the volume's okay there. Yeah, it has been a leader in the past there. It's pretty strong. So did get a little, lower high break here. Has broken the last of the swing high as well. The volume's been pretty firm here, so doesn't look too bad, Chris. Actually, I did look at this because I noticed it's held the 50 there on the weekly. It has does have a series of high lows here. But the trend's been pretty strong here. So I thought this didn't look too bad actually. I was watching this personally there. I just didn't like the fact that this was still going to be under the 50-day moving average in terms of a little B wave break here. So it's just didn't meet one of my filters there for that. Come back a little deeper there, but no, it doesn't look too bad. That's probably breaking through there. The volume's been pretty high there. Although it did have that 1 day selling, we did get bought up straight away here. So I did think that did look okay.
Well, number 10 on the list, we've got Where was it? LYC, so the Lynas Rare Earths.
LYC.
Kind of getting
Yeah.
wider, isn't it?
Yeah, it's just a bit loose here. Looks okay here, but that's you still come back here pretty deep. And yeah, you've had an impulsive move here. You'd like to see this congestion tighten up. The good sign is so far, this volume's been pretty nice. That's pretty decent volume on the way up. But then we have come back here, so it's a little loose. But maybe it'll pull back in here, rally again, pull back and tighten up again. So we just want to see that price, so it's all about risk here. So not saying this can't go up here. It's pretty erratic here so far. It's really, look how it really comes out here. So you'd like to sort of see it use up a bit more time here, build here. So, but that's the first step. That's the first step. That's the first green shoots are there. That's good volume, impulsive, but we just need a bit more time there with that one.
And the last one, I like this question because it came as sort of one more about the group and the thematic as well, or the sector, which we love. So I thought it was really good. Where 9 NEC, that's ranked number 2 on the Launchpad list. So that chart was in there. And
Yeah.
so I imagine you could tell us about episodic pivots and so on. But then they also asked, well, then is there sort of like a sister support going with SWM, and sort of do you use one to indicate the other, and then can they kind of cross over to help you trade each other? I don't know. So giving you sort of a two-pronged question there, which is coming off the back of NEC being ranked number 2 on the Launchpad this week.
Yeah. Yeah, no, look, it is interesting. I mean, it's a good question. I think the sector strength is very important, I think. We know sort of all the studies there. So the Stan Weinstein talks about, performance being at least double, in a strong sector. It's definitely one of the filters that I look for. The stock looks red hot and the sector is super weak and breaking down. I'm very suspicious. Whereas if the sector is pretty buoyant, pretty strong, and we're getting a good setup there, then definitely trading with confidence there. So, yeah, and if you go back and review your trades and your winners, I would say close to 80-90% of them that the winners come up with a strong sector relevance. So, if anything, after doing lots of reviews and trading there, that's something that's just keeps coming up over and over again. And all the great traders talk about it. And if you review your own trades as well, I think you'll see the same thing here. So, I mean, this stock is coming off a bit of a deep low, Chris. That's probably the negative there. So you're obviously starting to see some strength here in the short term. So, but that's a bit of a, if you look at Dicker Data and Endeavour and Ramsey, those stocks are all coming off pretty mean downtrends as well. So maybe it's the time, you don't normally see this until after June 30, but maybe the dogs of the Dow, maybe the dogs might start barking here. But yeah, it's interesting is seeing all the dogs in the list here this week. So yeah, maybe there's a bit of a shift there as well. But yeah, it looks okay. NEC, you're just obviously coming up in the face of sort of some heat here, but yeah. I personally like the stocks if they've been really negative like this for quite a while and coming off a pretty hard downtrend, I personally like to see that base build at 0, 1, 2, 3 built before I look at them, just because the odds sort of favour the strong stocks. Kalamagi, Minervini, all the greats tell us that we should be looking at top right rather than bottom right sort of trading here. So. For me personally, I sort of only look at that sort of bottom right if we've sort of got a bit of a base that's been built there. It's taken some time to build that base. See those sort of 3 high lows there as well, because that's from my experience there. We don't really get going until we've got those ingredients there. But the classic V-wave recoveries, they're very few and far between. Normally have to see a bit of a base being built there. Even the strongest names here will see some sort of basing activity first.
Well, that's a good insight onto how to trade them at the lows and at this stage of the cycle. I remember from looking at how you were trading when you traded 360 and what you were looking at before the market bottomed, I think was October 22 lows. you were watching Life 360 and how it was setting up a higher low at the time, or foundations before it, and what that base formation was. So maybe something, look, I'm not saying specifically for NEC, but it's set up like that in the late stage where we've got the market up near its highs and the gold stocks like you've got on the chart screen there. If they're already running that hard, maybe something like NEC is creating the foundations to be a leader for the next run, and it could just be hard in this late stage to play that catch up. But I know it's been surprised before with markets leading for longer than we expect.
I guess there's some interesting charts got posted there on the weekend. I saw Chris, and like one was talking about the Mag 7 versus the S&P 493, and so looked at the performance of the Mag 7 earnings versus the 493. So I think 23, I think the performance was about 36% earnings growth in the Mag 7 and -3 in the 493. And I think in 24 it was the late high 20s, the earnings growth, and the 493 was up 3 or 4 in 24. So they are forecasting a bit, again, looking for those Mag 7 to be lighter again, so maybe 10 to 15%, but seeing a bit of a shift in the 493. So one of the issues with the market has been there's definitely been a lack of breadth, and there's been a very few doing all the, and we've probably got the same issue in Australia as well. Financials have been pretty robust there, and growth shares, everything else has been sort of lagging here. So you do sort of see that once those sort of, saw a few studies there actually, even looking post 2000, and some of the big tops in the market there, is that some of the small to mediums can actually perform pretty well even in a bear phase as well. So if you might actually have the market might correct, you might get like a 27% correction in the market. Some of those other sectors can perform pretty well, the sectors that haven't done well in the past. So you can get a shift in the mechanics of the market a little bit as well. So yeah, it's interesting that they're already looking at some of these, there should be an emergence of other stocks come through here. So it has been a little bit light, and just driven by a few names there. And you've got to, surely we can't sort of see, this is at a P of 30 times here. Surely you can't go to 50 or 40 times or 60 times earnings, just a bank with what, 3 or 4% earnings growth. So yeah, so it can't keep going, So we're going to need other sectors to sort of pick up here. It's already amazing that we're already at this level here. Yeah.
Well, definitely as a momentum trader, you've studied the best charts, a bit like CBA, but over the last 3 or 4 years, and you've put together the model book. For those who have watched it, we definitely recommend watching it again to get really familiar with those charts and setups and really drill them into the back of the skulls and the retina to know what we're looking for. Those who haven't, you're in for a good long watch of solid charts over the last couple of years. We'll put that on the screen now and say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.